Welcome to Deep Dive. Today, we're plunging into, well, a really fascinating intersection. Worlds you might not expect to collide. Imagine the ancient practice of agriculture meeting, the super cutting edge realm of cryptocurrency. We're zooming in on a company called EndoDynamic's LLC. They're doing more than just, advanced farming tech boosting yields, optimizing water. They're also boldly weaving cryptocurrency right into the heart of their business.
Right. And while that might sound like just another crypto venture on the surface, what really makes EndoDynamics stand out is their approach. It's meticulous, proactive, really rigorous when it comes to token security and, well, investor confidence.
Yeah.
They're just jumping on a bandwagon. They're asking these deep, crucial questions that, frankly, often go unasked in the crypto space.
That's interesting. What do you think makes them so thorough right from the start?
So, for our deep dive today, our mission is basically to peel back the layers. We want to understand exactly what kind of detailed questions, what considerations define real due diligence here. We'll use EndoDynamics as our example, looking at the big vulnerabilities and how they tackle them, and also the wider implications of this whole financial revolution for you. So yeah, EndoDynamics isn't just like adopting a trend. They're using crypto to really shake things up. Investment, transparency, even global market reach in farming.
Oh.
But the key thing, that sort of secure seed approach, is this absolute commitment to security.
And that commitment is so critical because the crypto world, with all its potential, it definitely has inherent risks. You just have to address them.
Yeah.
Our sources really highlight a few key vulnerabilities anyone getting involved needs to know, like hacking and fraud, exchanges, wallets, they're constant targets. And when breaches happen, the loss is often permanent, irreversible.
Right, totally on. And it's not just the big hacks, is it? There's the sneaky stuff, too.
Yeah.
So, phishing, social engineering, they're relentless. Scammers are always cooking up new tricks to get your private keys or logins. Then there's the regulation aspect, or lack thereof. It's largely unregulated, which unfortunately can open the door to scams, Ponzi schemes, market manipulation. And what makes all this so high stakes? The fact that transactions are irreversible. Once it's confirmed on the blockchain, that's it. It's done. You can't call customer service to reverse it. So security isn't just important. It's absolutely essential.
That finality is a huge point. So how does EndoDynamics build trust in that kind of environment? I mean, blockchain has some security built in, but you said they go further.
They absolutely do. You're right. The underlying blockchain tech does offer a strong base, cryptography, decentralization, consensus. That helps. But EndoDynamics leverages that and then goes, well, above and beyond. They've got stringent internal rules. They get comprehensive security audits for their tokens. They oversee the whole process, the smart contract code itself, right through to secure wallet practices. It's really an end-to-end strategy. They're aiming to proactively prevent risks, not just react, setting a pretty high bar, actually.
Okay, so given those risks you laid out, how does that commitment translate into action? Like, what are the actual questions they're asking, the nitty-gritty stuff others might miss?
Well, it really starts at the foundation. Smart contract security measures. They go beyond just using standard secure libraries like OpenZeppelin for, say, ERC20 tokens. They really drill down into advanced coding practices. It's not just about code that works. It needs to be basically bulletproof and efficient, too, saving on transaction costs, the gas fees. So this means a heavy focus on protecting against known common vulnerabilities.
What sort of vulnerabilities are we talking about? Can you give us some examples of what they guard against?
Sure, like reentrancy attacks. It's a bit technical, but think of it like a bug that lets someone withdraw funds repeatedly before their balance updates. These have caused massive losses in other projects. EndoDynamics builds specific defenses against that. They also tackle things like integer overflow and underflow, nasty little math errors in the code that can mess up balances or permissions in unexpected ways. And then there's front running. That's where someone sees your transaction waiting to be processed and slips theirs in just ahead of yours to get an advantage. They protect against that. Plus, measures against denial of service or DOS attacks. Things designed to just grind the system to a halt. So, protecting against stuff like gas limits being hit, unexpected errors causing transactions to fail, or code getting stuck in endless loops. And what's really telling is their audit plan. They commit to a security audit by a reputable outside firm before anything goes live. And this is key. The full report will be public, available for investors to see. That transparency is huge. Plus, they detail how they'll fix any issues found. They even design the contracts to be upgradable, using smart techniques like proxy patterns. This allows for future improvements while avoiding technical glitches. And, crucially, control is decentralized to stop any one group having too much power.
Okay, so the security isn't just the code itself. It sounds like it's the whole environment around the token.
Exactly. It's a comprehensive security framework, covers the whole ecosystem, infrastructure, how they develop things, operational security day to day. They even look at supply chain attacks, risks coming from third-party tools or libraries they might use. And they have plans for ongoing monitoring, threat detection, and how they'd respond to an incident after launch.
What about managing the actual crypto assets, like the company's own funds or big investor holdings? That seems like a major weak point sometimes.
A huge one. That's where secure asset management comes in. They strongly recommend things like multi-sig wallets. Think of it like needing multiple keys held by different people to open a vault. Maybe 2 out of 3 signatures, or 3 out of 5 for higher value assets. They also detail how to reduce risks like human error, someone getting tricked, or even insider theft. Strict rules for key distribution, access. They even think about physical security for cold storage, keeping keys offline geographical separation, and having clear recovery plans if something goes wrong. They also consider newer tech like multi-party computation, MPC, for key management. It's another way to avoid a single point of failure. They weigh the pros and cons against traditional multi-sig things like complexity, speed, user-friendliness. And for the big money institutional investors, the project's treasury, they talk about using qualified third-party custodians, and they have strict criteria for choosing them: regulatory compliance, strong security standards, and really important good insurance coverage.
Wow, that is incredibly thorough. Okay, but what about the token itself, the tokenomics and protecting investors from, those crypto horror stories?
Right, that brings us to tokenomics and investor safeguards. How the token actually works and stays stable over time. They define the economic model. Is it inflationary, deflationary, some kind of hybrid? And how that model supports long-term sustainability. This isn't just guesswork. It's backed by financial modeling and clear incentives. And something absolutely critical: detailed vesting schedules and lockups. This is for the team, early backers, advisors. Their tokens get released gradually, not all at once. This prevents huge sell-offs that could crash the price. They explain how it aligns with the long-term vision and how it's enforced. They even address the risks, like potential price dips when tokens unlock, and how they plan to manage that. And for direct investor protection, they detail steps to prevent rug pulls where developers just vanish with the money. They go beyond just locking liquidity pool tokens, which is a common but sometimes insufficient step. They talk about team transparency. Will the core devs be public? Ensuring the smart contract code is clean, no hidden malicious functions to block sales or mess with balances. And they aim for a healthy distribution of tokens among holders, avoiding too much concentration in just a few wallets, which can lead to manipulation.
So they're actively trying to build in stability and prevent the wild manipulation you sometimes see.
Precisely. Market integrity is a big focus. Internal policies, technical safeguards against pump and dump schemes by insiders or big holders, plus mechanisms to monitor trading activity for weird patterns and plans to respond if manipulation is suspected. They also lay out their plan for providing initial liquidity on decentralized exchanges, how it'll be locked, how tokens will be managed, and finally, if staking is involved, they explain the mechanics: the consensus model, benefits, requirements, rewards, potential penalties, and how it supports decentralization.
Okay, we've really dug into the security side, which is clearly paramount for them. Now, let's zoom out a bit. What's the bigger picture here? What larger trends is EndoDynamic's tapping into by blending agriculture and digital assets?
Yeah, this is where it gets really interesting. They're tapping into a huge transformative shift. Digital assets are increasingly seen as a driver of, well, next generational wealth,
Yeah.
and maybe the future of money itself. The numbers are pretty staggering. Global crypto ownership is booming: over 560 million users in 2024, and forecasts suggest it could be over 824 million globally as of early 2025. That's massive growth.
Wow, that's incredible speed. Who's really pushing this adoption?
It's significantly driven by younger generations. One study showed something like 94% of crypto buyers are Gen Z or millennials. It really points to a major shift in how different age groups think about finance. And because of this, crypto is seen as a serious way to build wealth. Estimates suggest nearly 173,000 crypto millionaires worldwide. And it's not just individuals. High net worth individuals are in too. One survey found about 71% have invested in digital assets. They see it as a legitimate asset class.
So it's definitely moved beyond just a niche hobby. It's becoming a real part of wealth strategy, especially if traditional routes feel limited.
Absolutely. A lot of investors, especially younger ones, feel that achieving really strong returns just through stocks and bonds is getting harder. So they're looking at the diverse opportunities in crypto ICOs, DeFi, NFTs, plus assets like Bitcoin are increasingly viewed as a store of value, maybe even a hedge against inflation. So people are integrating these digital assets into long-term planning,
Mhm.
thinking about generational wealth. And it's starting to have real-world economic effects, too. We're seeing studies showing that crypto wealth gains can impact spending, even helping some people buy homes.
Right. So EndoDynamic's is positioning itself right in the middle of this shift. It's smart. They're essentially opening up access to agricultural investment for a whole new group of people, especially those younger digital first generations, allowing them to participate in and benefit from a really vital industry so they get capital for their farming operations and at the same time build this global community of people who are literally invested in their success. It really is like cultivating the future, but with securely managed digital assets.
Exactly. EndoDynamics is a powerful example of how traditional industries, even something as old as agriculture, can innovate by carefully, thoughtfully integrating new tech like crypto. What this deep dive really showed is that real success here isn't just about launching a token. It's about this deep, almost obsessive commitment to security, to transparency, and really understanding this changing financial world and who's driving it.
Yeah, and what really jumps out is how vital it is for any project in this space to ask these deep questions. Understanding these details, all the things we've discussed, helps you as a listener sort through the noise, evaluate how solid a new venture really is, separate the real potential from just hype, and make much smarter choices. So, thinking bigger picture. What does this mean for other traditional sectors? If agriculture can innovate this deeply, this securely with digital assets, what other industries might be next? And how could that fundamentally change how we all invest, participate, and maybe build that generational wealth down the road? Something to think about.